how do we fix the money for 1 billion people? And what we realized is the answer is not convincing 1 billion people to adopt Bitcoin as the currency instead of the dollar or the yen or the euro. And the answer is not getting them to, throw away their bank, replace the government, rethink their world, disclaim interest in all corporations, and self-custody. These are all crypto ethos things. And it's not that I'm not negative on them. They're all valuable. But I think after 5 years, believe me, I preach Bitcoin to more people than, anybody. It's 1,000 hours, and you're going to convince 1%, 2%, 3% of the people to put 5% of their money into this asset. You're not going to convince 75-year-old retirees.
Strategy co-founder and executive chairman Michael Saylor is undoubtedly one of Bitcoin's most relentless and effective advocates. Since his company began accumulating Bitcoin in August 2020, Saylor hasn't just been investing capital. He's been investing time, energy, and conviction into explaining why this asset matters. But in this latest interview, he does something different. Instead of repeating the usual bullish case, he steps back and critically examines why, despite years of evangelism, Bitcoin adoption hasn't accelerated the way many expected. What Saylor reveals is surprisingly grounded. The challenge isn't that Bitcoin lacks value, it's that the way it's been presented to the world is fundamentally misaligned with how most people think. The idea that billions of people will abandon their banks, reject government systems, self-custody their assets, and fully embrace a new financial paradigm was always unrealistic, not because it's wrong, but because it demands too much change, too quickly, from people who simply don't operate that way. And that insight reframes everything. Because if mass adoption isn't going to come from ideology, it has to come from utility. People don't adopt technologies because they're philosophically pure. They adopt them because they make life easier, safer, or more profitable. Just like electricity, automobiles, or smartphones, the winning solution in finance won't be the one that asks the most from users. It'll be the one that gives them the most, with the least friction. That's where Saylor's thinking evolves. Instead of asking how to convince 1 billion people to understand Bitcoin, he asks a much simpler question. What kind of financial product would 1 billion people naturally choose without needing to understand anything at all? And the answer he arrives at could completely reshape how Bitcoin integrates into the global system. Before we get into today's breakdown, quick question. If you're holding crypto right now, what is it actually doing for you? Most people are stuck in the same loop. Buy, hold, wait. Your capital just sits there while the market moves around it. FortisX changes that. It's a staking and on-chain analytics platform that lets you put idle assets to work, earning yield through staking and liquidity strategies, with rewards distributed every 24 hours. No lockups. Withdraw anytime. And unlike most platforms out there, FortisX has been operating since 2018. In crypto, that kind of longevity means something. So if you're holding anyway, should your assets just sit there, or should they compound? Link is in the description. Start with at least $100, and there's a 1% bonus waiting for all savvy viewers. Thanks, and let's get back to the video. If you find this kind of breakdown valuable, take a moment to like the video, subscribe to the channel, and let me know your thoughts in the comments. Because what Saylor lays out next isn't just a prediction, it's a roadmap.
Where do you believe the price of Bitcoin will go?
Well, I think it's going up. Like I've said, I've got a 21-year view. And my 21-year view is that over the course of 21 years, it's going to average about 29% ARR. It's going to decelerate. It's been growing a bit faster, and it will decelerate to grow a bit slower. I think the past 5 years is like a 37% annualized growth rate. So if it moves from 37% down to 20%, you'll get some blended rate. You'll get a blended volatility. And I think, where are we right now? I think it's oversold. So I would expect that Bitcoin will be much higher by the end of the year than it is right now. But, Bitcoin has a way of making fools of all of us when we try to forecast its 12-week move or 24 or 2-week move. It's a bit above my pay grade. So long term, I am bullish. Near term, I'm also bullish. And in the intermediate frame, I'm sure there'll be a lot of unexpected surprises due to unexpected developments that none of us can anticipate.
Okay, so at that level of growth, like the 20-year time horizon, what price does that get us to for Bitcoin?
Oh, I think eventually it's going to 20 million, 21 million a coin.
21 million a coin. Okay, so what's that, like a market cap of like 400 trillion, something like this?
Yeah.
400 trillion.
I think it's going to emerge as the dominant digital capital of the world.
What would shake your confidence in that?
I haven't seen anything to shake my confidence yet. By definition, black swan, something unexpected, unanticipated.
I guess the inverse of that question is, what has to go right for that to be the case? $20 million Bitcoin.
That's a little bit easier answer. The global embrace of it is a legitimate asset. As the Americans, the Chinese, the Europeans, the Japanese recognize it as a capital asset that you can hold for long-term investment or long-term store value, that's a big step. The second step is adoption by the banking system. Right now, the Basel rules heavily penalize a bank from holding Bitcoin. I think if they normalize that so that banks aren't penalized for holding Bitcoin as collateral, I think that would be a big step forward. I think the securitization of the asset, the formation of all these ETFs and the amount of capital flows into it is a third step. I think the formation of bank credit networks, like there's about 450 Bitcoin a day at 70,000 a coin, 30 million a day, about $10 billion a year in organic supply available for sale from the miners. So call that 10 billion a year is 1 year's supply. That's going to get cut in half in 2 years. Every time someone creates $10 billion of credit, they buy the entire year's supply. So for example, my company sold about $10 billion worth of digital credit. We bought an entire year's supply on that digital credit, and that's something we created in the past 12 months. But if a bank like JP Morgan starts to extend credit on Bitcoin as collateral, someone posts 100 billion or 50 billion of Bitcoin, JP Morgan offers 10 billion in credit. That 10 billion of credit is 1 year's supply of Bitcoin. So every $10 billion of credit that's created is one turn on the network. So I would be looking at the formation of bank credit networks and how big they get. Like how much credit will Schwab or Citi or Morgan Stanley or JP Morgan extend on the underlying capital asset? Because the thing that holds the price back is the need to rehypothecate the Bitcoin in order to generate a loan or get yield. So a lot of people, you've got more than $1 trillion worth of Bitcoin out there that's unbanked in the shadow banking system. So when I need yield, I'm rehypothecating it and someone's short selling it. And when I need a loan, if you want a conventional loan against Bitcoin, you're paying 11-12% sometimes. But if you went to a crypto exchange, they might give you the same loan for 2-3%. But the catch is the cheap money requires that you transfer the Bitcoin and they rehypothecate it. So if someone's pledging $100 billion of Bitcoin as collateral in the crypto economy in order to borrow $10 or $20 billion of cash to spend, then you're short selling $100 billion of Bitcoin. So you're short selling 10-year supply of Bitcoin. So I would say probably the thing that's holding the price back is rehypothecation of the underlying crypto asset in the crypto economy. And the thing that will drive the price to the moon is people stop rehypothecating and we call that asset back, we put it in cold storage, and then whoever sold it short has to buy it back and the price moves north. But of course, the reason that people don't do that is because up until now, even today, it's very difficult to get a conforming loan or a conventional loan against Bitcoin. So people are forced into the crypto economy and this dynamic of rehypothecation. So bank credit networks will be very big. I mean, $100 billion or more bank credit could form. And not only will you have less demand to sell $100 billion of Bitcoin, But you will also have people migrating from rehypothecation and non-rehypothecation, and that'll create a short squeeze on the other side. The other dynamic is digital credit. So my company is selling STRC, it's digital credit instrument. So the other, like 2-3 weeks ago, we sold $1.2 billion of it. When we sell $1.2 billion of STRC, we buy back $1.2 billion of Bitcoin. And that week, we bought 5 Bitcoin for every Bitcoin mined, or something, some insane amount. If we sell $10 billion of stretch in a year, we're going to buy the entire supply mined by the miners. When we sell 20 billion, we'll buy 2x the supply. So the formation of those digital credit networks will facilitate a huge amount of capital flowing into the system as well.
Saylor uses a simple analogy to explain the present state of the Bitcoin market. Picture 2 neighborhoods on opposite sides of the same street. One is considered unsafe. No banks will finance property there, so buyers need cash and prices stay low. The other side is fully supported by the banking system. Loans are cheap, risk is low, and prices skyrocket. The houses themselves aren't different. The difference is access to credit and perceived safety. That's exactly how Saylor sees Bitcoin today. Right now, Bitcoin still sits closer to that unsafe side of the street. Volatile, underfinanced, and largely excluded from traditional banking credit systems. But as volatility decreases, regulation stabilizes, and major institutions begin offering loans against Bitcoin as collateral, the entire perception shifts. Suddenly, it's not just an asset, it becomes bankable capital. And when that happens, the flow of credit into the system could dramatically accelerate demand. At the same time, new forms of digital credit, like the instruments Saylor describes, are already beginning to absorb Bitcoin's limited supply. When billions of dollars in credit are created and used to buy Bitcoin, it effectively removes supply from the market. And if that trend scales across global banks and financial institutions, the imbalance between supply and demand becomes extreme. But all of this leads to a bigger question. Even if Bitcoin becomes the backbone of global finance, how does that actually benefit everyday people? How do you take something this complex and turn it into something anyone can use? That's where Saylor takes the conversation next.
How do you make the world a better place? You provide a utilitarian value, something valuable to a billion people that everybody just agrees on. And so, with Rockefeller, it's like kerosene, gasoline, and everybody just lives a better life. And then with Ford, it was an automobile. And who doesn't want an automobile? And then Jobs gave a billion people an iPhone. Nobody just wants an iPhone, and then we had like electricity. And so we like those things. So what is the equivalent in the digital asset space? And the answer is everybody would just like a bank account that pays them more than the inflation rate. Like, how about give me a bank account that pays me 8%? Right now, your bank pays you 0, right? The money market pays you 3.7% before tax. If you live in Japan, it's 50 basis points. If you live in Switzerland, it's nothing. So what is the idea? Well, I would just like Social Security, or I'd like to live comfortably ever after. I'd like, what we say tongue in cheek is fix the money. How do you fix the money? Well, Bitcoin people have been thinking about how to fix the money. And I think what we've realized is the way to fix the money is to integrate the promise of technology. What does Bitcoin represent? It represents digital capital. Digital, something that moves at the speed of light to a billion people. Capital, scarcity, right? It represents a capital asset with integrity. So how do we fix the money for a billion people? And what we realize is the answer is not convincing a billion people to adopt Bitcoin as the currency instead of the dollar or the yen or the euro. And the answer is not getting them to, throw away their bank, replace the government, rethink their world, disclaim interest in all corporations, and self-custody, right? These are all crypto ethos things. And it's not that I'm not negative on them. They're all valuable. But I think after 5 years, and believe me, I preach Bitcoin to more people than, anybody. It's 1,000 hours, and you're going to convince 1, 2, 3% of the people to put 5% of their money into this asset. You're not going to convince 75-year-old retirees, right? Nor should you. So what's the great product idea? Wouldn't it be great if I just bought a product and it paid me money for the rest of my life? Like, I just want 10%, a bank account that pays me 10% or 8%. If the natural organic inflation rate is 7, and I think you can make the argument, and I've made this argument with you guys probably in the past, over 100 years, the natural currency debasement rate is about 7%. And so if your money is paying you more than 7%, then you're keeping up with the cost of living. And if you're getting 2%, you're getting debased and you're getting poorer. So how about bank accounts that pay 8% to a billion people, right? That's the product. How do you create that? So we create a credit instrument and we strip the vol off of it. We offer 11, but if you're a bank in Australia, you could just take that 11 and you could pass through 8, convert it to AUD. And if you're a bank in Europe, you could offer 6 or 7% in euros. So we basically create digital credit and we offer it to Deutsche Bank and JP Morgan and Commonwealth Bank and Morgan Stanley and BlackRock and Vanguard. And if people, if you think of it as just high-powered money, what is high-powered money? It's a unit account, a store of value, a medium of exchange. Well, stable coins prove that they were a medium of exchange and unit of account, but if we cripple their ability to pay a yield, they're not a store of value. So I want something that's stable to the dollar, but I want it to appreciate, ideally tax-deferred, more than 7%. So, and this is me drawing inspiration from the entire crypto industry, right? The stable coins taught us something. Bitcoin taught us something. Digital exchanges taught us something. What's the big idea? The big idea is give people this digital money market type instrument. Maybe we're not the money market. Maybe we're the digital credit layer. Bitcoin is a digital capital layer. And the third layer is digital money. And the banks and the financial advisors, they create the digital money. Like, I meet with, the Emiratis, and I said, okay, you got a bank. What if your bank just offered people 8% on their dollar deposits? People want to overthink this thing. It's like you see fire. Some people run away from the fire. Some people want to juggle the fire. They're fools. They want to juggle the fire. And then some people put the fire into the car or the plane and they create a jet airplane or a car. It's like most people juggle the fire. Like you're trading Bitcoin and trying to be right and wrong. It can be juggling the fire. Here's the idea, the big idea. The bank in the UAE pays you 8%. You wire $100 billion. They pay you 8%. They get the $100 billion. They keep 100 or 200 basis points. You just double the gross national product of the country. Okay, what did you do? Not that complicated, right? The irony is, and this is what drives people nuts, they're looking for a complicated solution when in fact the obvious simple solution is right in front of them. And that is this. You just step digital credit down to zero vol, convert it to the currency of choice, give people a bank account to pay 6% in yen, 8% in euros, 8% in dollars. The money flows into the bank, then it flows into digital credit, then it flows into digital capital. Digital capital is scarce, desirable, and cannot be debased. The price of the digital capital goes up. The collateral goes up, right? We remit the cash flows from the capital gain back to the credit investors. So what is the end game? Let's give 1 billion people a bank account that pays them 8%.
Saylor frames Bitcoin's ongoing transition in the simplest possible way. The best product in the world is something you buy once, and it provides value forever. And in financial terms, that value has a very specific meaning: money that grows faster than inflation, without requiring constant effort, risk-taking, or expertise. Not trading, not timing the market, just holding something that works. That's where the idea of a new kind of bank account comes in, one that doesn't pay 0% or barely keep up with inflation, but consistently delivers returns above it. A system where digital capital, powered by Bitcoin, feeds into digital credit, which then feeds into everyday financial products offered by banks. The complexity stays behind the scenes. The user experience becomes simple, and that's the key shift in Saylor's thinking. Instead of forcing people into crypto-native behaviors, self-custody, complex wallets, ideological shifts, he's describing a system where traditional finance absorbs Bitcoin and translates it into familiar products. People don't need to understand Bitcoin, they just need to benefit from it. He even draws comparisons to other transformative technologies, self-driving cars, intelligent robots, products that remove friction from life rather than adding to it. In that context, a financial system that quietly compounds wealth in the background becomes just as powerful, if not more so. And ultimately, that's the endgame he's describing. Not a world where everyone becomes a Bitcoin expert, but a world where Bitcoin sits underneath the system, powering better outcomes for billions of people. Where the question isn't, do you believe in Bitcoin, but simply, does this product make your life better? If you made it this far, you already understand how big this idea is. So let me know in the comments. Do you think this kind of integration is inevitable, or is Saylor underestimating the resistance from the existing system? If you enjoyed this breakdown, don't forget to like the video, subscribe for more deep dives like this, and share it with someone who needs to see it. Thanks for watching.